with Prabhudas Lilladher joins us to talk about market fundamentals. Ajay, good morning and thank you for joining us. Ajay, with less than 10 days away for the election result, I guess nothing else really matters. So how are you advising your clients, and how are you proposing that one should approach this event?
I think a significant section of the market, based on some of the leading pollsters' numbers, clearly seems to have discounted the fact that a decisive mandate would be returned by the Indian electorate on 16th of May. And the strong upsurge that one has seen in the Indian markets, led mainly by roughly $5.5 billion of inflows from the FIs from 1st of January, and also around $5 billion of inflows in the fixed income market. I think is clearly testament to the fact that people are expecting a decisive mandate, and as most of the polls are recommending, are sort of indicating, the principal opposition-led coalition is expected to cross the magical halfway mark. Now, in case the mandate does turn out to be different from sort of what the market consensus is, then we are clearly would be in a bout of strong volatility. And hence, I think as we go into the 16th of May, that most crucial day, I would be advising investors to tread on the side of caution. Wherever I think one has sort of seen a strong upsurge, one needs to sort of partially sort of look at booking profits. At the same time, not completely sort of overlook the fact that a decisive mandate would in turn mean that a revival of investment cycle will be foremost on the agenda of the dispensation that comes to power. And hence a judicious mix of defensives and cyclicals is what I would be advocating investors sort of and there
right, Ajay.
it also
Ajay, just want to come to the point that you were just making, a judicious mix of IT or rather defensives as well as cyclicals. What amongst defensives are you recommending to your clients right now?
Yeah, I think the fact that the global economy has bottomed out and IMF is expecting 3.5% growth in the global GDP, mainly led by the buoyancy in the largest economy of them all, America, and the fact that UK is doing extremely well and Europe also is coming out of recession, makes it extremely positive on some of the bellwether IT companies. I think Wipro and Tech Mahindra, along with Infosys in the large cap space, is what we are advocating investors to look at. We are expecting in the second half, I think, the recovery to gather steam globally and the pricing power to come back to the IT companies. A target price of 600 and 80 on Wipro is what we are looking at with a medium-term perspective. In Infosys, we are looking at a target price of 39.20, and Tech Mahindra, we are looking at a target price of 2,080 rupees with a one-year perspective. In the mid-cap space, I think Mindtree is what we are advocating investors to look at, where we are expecting 1620 as the target price with a one-year perspective. The other pie that I would ask investors to look at closely is pharmaceuticals,
right.
Dr. Reddy's lab in the large cap space, and Aurobindo, which is already moved up. We have been recommending for 6 months, but we still feel there's some legs to go.
Ajay, bulk of the earning for IT and pharma is a function of currency. If in the short term, indeed we get a clear NDA mandate, maybe rupee could appreciate. If rupee will appreciate, most of the exporters will report a sequential drop and a big margin erosion. So some would argue that it's too early or perhaps too risky to buy into exporters.
Absolutely not. In fact, the mistake that the Indian economy had done when we had seen a torrent of large inflows, I think a few years back during the bull run, and had led the rupee, and we had allowed the rupee to appreciate to, I think 48, 49, I think had dealt a death blow to the Indian export sector. Let's not forget, Nikunj, that the improvement in the current account deficit to start with in June, July was based on a double-digit growth of exports, and also the fact that we had scuttled illegal gold imports. But over the last 2 months, a very dangerous sort of or a worrisome trend I am seeing, which is exports becoming negative again. And hence, I think both the principal opposition as well as the ruling party in their manifesto have said that on a sustainable basis they would like to control CAD by ensuring that the exports are given a leg up. And the only way exports can be given leg up, in addition to the other factors, is by making the currency more competitive. I think RBI is being urged by a lot of leading economies.
Okay, Ajay, we will just come back with you. Going to take a very quick break, come back and also talk about Mitesh Thakkar's trading ideas.
आपने पासपोर्ट बनवाया है? तो तुम लोग जापान कैसे जाओगे? इसकी चाबी जापान का ही है ना?
Only your fingerprint can unlock it. Godrej eBio. अब मुसीबत से डरना कैसा?
Did you know that stocks with an attractive dividend yield can be a good investment option in every market condition? Presenting the ICICI Prudential Dividend Yield Equity Fund, a fund that aims to invest in good companies with attractive dividend yields. NFO closes 9th May 2014. To know more, consult your financial advisor or log on to icici-pruamc.com. ICICI Prudential Mutual Fund. Tarakki Kare. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Get it first, get it right. Read Pure Politics in the Economic Times.
Mercerized cotton से बना कोठारी vests, cool and comfortable. पसीना gone, हसीना on. Kothari vest, briefs and socks.
Back with trading calls right here on ET now. Holding up pretty okay for the SGX Nifty this morning. Still continue to be volatile for our markets. At least that's been the trend of late. But let's go across to Mitesh Thakkar and find out how best to approach the market by way of specific stock ideas. Mitesh?
A couple of banking stocks on the buy list. I would suggest buying into Andhra Bank if it starts getting past 68.5. Buy then with a stop below 66. Look for targets of 75. Canara Bank is a buy with a stop below 296. Look for targets of 320 in the short term. Cipla is a sell call. Sell with a stop below a stop above 399. Look for targets of 375. Slightly positional call given that Cipla is a low beta stock. HUL is a sell with a stop at 570 and I'm looking for a new low around 535 levels. And I've got a buy on REC with a stop below 238, suggesting a target of around 260 on the upside.
Mitesh, thank you for those trading ideas. Ajay, we are almost the midway mark when it comes to Q4 numbers. And the bad news here is that we've not got any big number surprise or result upside. IT numbers in line with estimates, FMCG numbers below estimates, and manufacturing numbers have really been non-inspirational. So do you think based on the early Q4 numbers, earning estimates are unlikely to be revised?
I think I tend to agree with you because as you rightly put it, I think the numbers on the whole have not really beaten expectations. And as you said, I think insofar as the investment cycle is concerned, even when we talk to companies at the ground level, there doesn't seem to be any improvement in aggregate demand when you talk to capital goods companies or construction companies. So the entire hope is riding on how the new government is able to revive the moribund investment cycle. The current government has cleared 6 lakh crore worth of projects through CCI, but as of now, I think the entrepreneurs are still holding back. So for the animal spirits to come back, I think a new budget and the policy is enunciated in that for manufacturing sector is what will be keenly looked at. So overall, I think I don't see the numbers being upgraded for FY15 because the revival, if any, will only happen from the second half of the current financial year. We are going with a 15% growth, 14.7% growth in FY15 for Nifty, and a growth and an EPS of around 445. So hence the market currently is trading at around 15.1 times FY15 earnings, and 15% growth further in FY16. So 514 rupees of earnings for FY16. So we'll be trading at around 13 times FY16. Last 10 years average Nikunj is 14.5 times. So from earnings we are fairly valued.
Ajay, you know, one is often talked about Just Dial and the kind of weakness the stock is seeing really on a daily basis, and ever since its entry into the futures and options market, it's fallen what, almost 40-odd% from the highs. What's the sense that you are getting? Further weakness to go for Just Dial before we see a valuation adjustment?
Unfortunately, won't be able to comment because the stock is not under the coverage universe of our company. So it won't be appropriate for me to proffer any view on that.
Three horsemen this year are BPCL, BOB and PNB. So after a recent run-up of about 25 to 30% in the three names I mentioned, which is the one you would like to endorse for another 20% upside from here?
I think I'll be clearly looking at Nikunj at BPCL because I think the entire downstream sector, I think if sort of a new government were to assume charge, it's expected that I think energy independence and fiscal consolidation, i.e. reduction of subsidies on the oil and fertilizer front, should be right on the top of the agenda. Or we have been seeing a marginal increase in diesel prices every month for last now 1 year or so. But insofar as LPG and kerosene is concerned, what kind of policies, whether they carry forward the Kirit Parikh committee recommendations and in the medium term do away with the subsidies, at least in the LPG over a 2-year period and kerosene over a 3-year period, along with taking one-time price hike in diesel, will be very closely watched, because they have spoken a lot about energy independence, remunerative prices, you know, for enhancing both oil and gas exploration indigenously. So I think oil and gas sector, in my opinion, along with transportation and power and mining, these three would form the bulwark of how sort of the market pans out over the next 3 years. Because a lot is riding on mining and power, transportation and sort of an energy sector.
What do you mind could work for mining as a sector right now? Because we've seen a whole lot of government hurdles as well kicking by.
Yeah, I think, you know, the most important is whether the Coal Nationalization Act is rolled back and commercial mining is allowed in coal. As of now, what we are seeing is that, you know, captive sort of a mining for power sector, steel sector and cement sector blocks are allowed for these. But no commercial mining is allowed. For instance, the global majors like Rio Tinto or BHP Billington or Xstrata, or even some of the domestic large conglomerates who want to enter into commercial mining for coal are not allowed. And I think it's going to be a politically fraught issue. However, I think in the medium term, if you want that the dependence on coal, the paradox of being one of the largest coal resources, having a country having largest coal resources in it importing, is to be overcome. It can only be overcome by ensuring that the private sector gets a far more play in mining of coal and allowing it to be sold to whichever party needs coal. So that is one issue that I think that could be a game changer for a new government to look at, denationalizing coal.
Ajay, small cap space is where all the action is, where all the excitement is, where all the gains are. So in the group of companies which are in the market, which have a market capitalization of less than $1 billion, what do you like from that club? What do you like from that basket?
I think, Nikunj, I would like to dwell on 3 or 4 mid-cap names, which I think we have been advocating investors to look at in the medium term. Some of them might have slightly higher market cap than what you just mentioned. But albeit, I think, you know, strong corporate governance, strong cash flows, free cash flow position and strong market position is what makes us positive on these names. And I think one stock in capital goods sector which hasn't yet participated as much as some of the others, but which has fundamentally strong is Thermax. I think in case of Thermax, we are expecting a strong growth of around 33% in earnings for the current financial year, followed by 25% in next financial year. And the company has a strong ROE of around 18%, and it is trading at around 18 times FY16 earnings. I think Thermax is what we would look at in the capital goods space. As and when investment cycle revives, this company will do very well. Has demand coming from various process industries for its boilers, heat exchangers. The other company in mid-cap space I would be advocating is Motherson Sumi. The stock has had a run, but both from the domestic revival in the economy as well as the European economy coming out of doldrums. They have very large operations in Europe. I think this is another name in the medium term that we are advocating investors to look at. In addition to ING Vaishya Bank. Now, this is one bank which has till now not performed too well, but we believe it has a defensive asset quality and the valuations are quite undemanding for ING Vaishya Bank. There we are expecting a target price of around 680 rupees in the medium term. The bank is trading at roughly 1.4 times FY16 price to book and 1.6 times FY15 price to book. So I think these three names from banking, capital goods and auto ancillary, I would be strongly advocating investors to look at.
So three names from Ajay, Thermax, Motherson Sumi and ING, but the stock which I want to flag off for our viewers is HDFC Bank, the most haloed stock. This year, even though we've seen a powerful rally in banks, HDFC Bank has been a massive underperformer. Nifty this year is up by about 8% plus, but HDFC Bank has been underperformer. Of course, there is a technical problem there. Foreigners cannot buy into HDFC Bank fresh, and because of rich valuations, even local investors I don't think are really buying into HDFC Bank. When was the last time HDFC Bank underperformed markets? I think it was really a while ago. Ajay, do you think HDFC Bank at the current juncture could be a deep contra bet? It has not participated this year. In general, when banks have got re-rated, a blue chip stock is languishing.
I couldn't agree more with you. I think it's one of the top picks that we have been advocating investors because we are looking at a target price of around 825 in the medium term there. And as you put it, the only reason why the stock hasn't participated as vigorously as some of the other private sector banks, in addition to the fact that it's trading at a slight premium to them, is the fact that FIs cannot buy into it. But I think as and when the new government takes over, I think the proposal, the FIPB discussions when they happen, I think a call will have to be taken about on HDFC Bank. And I think from that perspective, we are expecting HDFC Bank to do quite well in the medium term. We are expecting around 21% growth in earnings CAGR for FY15 and 16 for HDFC Bank. And the company, as we all know, has one of the highest ROEs in the business. So this should form part of the core portfolio, especially if you're expecting the India story to pan out over the next 2-3 years.
Okay, Ajay, stay with us. Lots more to chat about with you, but the pre-open rates after this very quick break also bring on board Satish Ramanathan and Bharat Shah from ASK Group.
See, the 2014 growth is higher because of three reasons. One is the GBI is already established. The second is the most important. Most of the states has come out with the policy framework for the pricing of the renewable energy. And the third is now the global funds are available to invest in Indian assets.
Catch Tulsi Thanti in an exclusive conversation on The Interview. Only on ET Now.
Leadership is all about the fine balance between power and finesse. Presenting the 2014 Fluidic Verna, a power-packed performer.
Hyundai. इस summer holidays get best deals on hotels across the world. जैसे कुछ चीजें obvious है to every destination, वैसे ही है best hotel deals to hotels.com. Call करें 1860-500-9191 or visit hotels.com.
Free heart surgery for 5,000 children. When we join hands, miracles happen.
Did you know that stocks with an attractive dividend yield can be a good investment option in every market condition? Presenting the ICICI Prudential Dividend Yield Equity Fund, a fund that aims to invest in good companies with attractive dividend yields. NFO closes 9th May 2014. To know more, consult your financial advisor or log on to ICICIPruAMC.com. ICICI Prudential Mutual Fund. Tarakki Kare. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
आपने पासपोर्ट बनवाया है? तो तुम लोग जापान कैसे जाओगे? इसकी चाबी जापान का ही है ना?
Only your fingerprint can unlock it. Godrej eBio. अब मुसीबत से डरना कैसा?
Welcome back. A minute 40 and then we'll get the first rates. But just before the pre-open bell, the big outlier which I want to discuss with Ajay is Hindalco. Ajay, what did the trick for Hindalco yesterday? Biggest gainer on the Nifty. I mean, the consensus view on the street is that China is a big problem, and if China is a big problem, why would anybody buy Hindalco?
I think yesterday, not just Hindalco, but a whole host of metal names, I think, which were beaten down over the last few days on the concerns of China slowing down, had seen buoyancy. So I think, I would put Hindalco one among some of the other metals names that had seen some sort of a bounce back. But I would still be very worried about going and buying metal names in a hurry, because as all of us know, the biggest determinant of global commodity prices is the demand environment in China. And some of the PMI numbers coming out from China clearly are making all of us worry about the sustenance of the growth there. So I think it's a one-off, and I would rather keep away from jumping into and buying metal names in a hurry.
Okay, so yesterday's price action in Hindalco, according to Ajay, was really a one-off. Now, as we walk into trade this morning, half of the Asian markets are shut. US markets had a very volatile, ride last night. But, depending on whom you're asking, I guess you will get a different answer this Tuesday morning. For those who are feeling optimistic about the election outcome, they are buying into beta stocks and banks. For those who are nervous about the event volatility, either they are locking some gains or they are simply buying into some defensive stocks, namely exporters. So it's difficult to pinpoint a particular trend because market mood and the market trends are divided. For the moment, the first pre-open rates are 27 points up for the Nifty. This could correct and this will correct. We've seen that markets have failed to capitalize on the early morning advantage, at least in the month of May. 23 points up for the Nifty, and it's a 38-point uptick for the Sensex. Let's start with the high flyers, and the big high flyers yesterday were Hindalco, HPCL, Reliance, and we saw a lot of price action even in ONGC. So Reliance a flat start, ONGC a flat start, Hindalco is not going anywhere, BPCL is at 470. Let's look at IT, which corrected. The selling was largely led by Infosys and TCS, no respite whatsoever for TCS, Infosys or HCL Tech. So the shift or the tilt from defensive to cyclicals, that continues, because IT after yesterday's carnage has not seen any follow buying, at least in the pre-open session.
Saw some strength on the currency, at least that is what the first tick was indicating, and now again it's fallen flat. We will just, of course, talk about the currency in greater details with Manisha in just seconds from now. Earnings today, HDFC Limited, Titan, Vijaya Bank, watch out for all these as well. Gujarat Pipavav too is going to come out with its earnings today. Titan starts off flat, or actually it's jumped into the green now. Gujarat Pipavav higher by about almost 1%. What is HDFC Limited doing? That should come up here on your screens next ahead of its earnings. And that's a smart start, up about almost 1.5%. Lots more stocks to talk about. But first, let's go across to Manisha to talk about the currency moves. Manisha?
Thank you for that, Aisha. Well, we did see a one-month highs at 60 yesterday, but the closing was on the weaker side. So after 3 days of gains, yesterday was a negative day. But today you have 0.1% of a gain coming in yet again for the currency on the opening trades itself. Well, yesterday Indian rupee was the worst performing currency in Asia. If you look at ringgit, that was really leading the gains, and that continues to be the case in the markets today as well. You are looking at Korean won, which is yet again trading at a fresh 6-year highs. The Japanese yen is trading at a 2-week highs as well. So most of these high yielding and other currencies seem to be doing well, while the pressure continues to build on the dollar index. For India specific especially, you have the reports which tell you that the global funds have sold up to a limit of $1.85 billion in the Indian bonds in the month of April. That has been putting pressure on the currency. Apart from that, there were reports of dollar buying from many of those import payments, and that has taken the rupee slightly on the lower side as well. The Ukraine issue, the weak Chinese data are some other factors which will hold too much of gains going forward in case of currency. Having said that, it's the general elections results in the next week that also is something that the markets are watching out for. If you're looking at that, you are looking at a very narrow range for the currency between 59.80 to 60.80 on the higher side for this week.
Right, Manisha, thanks a lot for that. What are dealers betting on and which way the wind could blow for individual stocks? For that, let's go to Ajay.
Good morning, Nikunj. Nikunj, Eveready Industries, a mid-cap battery company, came out with results after market hours yesterday. The results were really good. In fact, the company has come back into profits. And moreover, more than that, this particular year, fiscal 15, the management guidance of improvement in margins is something which a lot of analysts and traders would take notice of. The stock is already showing 3% up in pre-open. Can rise further according to traders. Keep an eye on that one. From the mid-cap cement space, India Cement is one stock which we understand a lot of funds are nibbling into low valuations, you may call it. Also trades at around $75 to $80 EV per ton kind of valuations. And interestingly, one section of the market has started looking at this one as a probable takeover candidate. So keep an eye on that one as well. Some big money seem to be moving into this one, nibbling into this one. And the last is ABB. Bank of America Merrill Lynch has raised targets, saying that this is one of the stocks to bet on as far as T&D recovery is concerned. So keep an eye on ABB as well.
Okay, Ajay, we'll leave it at that. Those are the three stocks to watch out for. Eveready Industries, India Cements, as well as Bank of America, talking about ABB, saying that they maintain and underperform on this one. But Ajay, I want your quick thoughts on India Cements. While cement is a sector, sure enough, has seen, done well off late, but would India Cements be your top pick? Ajay, the question on cement is to you.
You're asking me? Yeah. Okay, fine. You were asking some other Ajay, so that's why I got confused. Sorry about that. I think in the cement sector, our preference lies with Ramco Cement and ACC. India Cements, I think, the southern market in general, I think, is the weakest among all the other territories. And the company is laden with very high debt. So I think that would not figure among our top picks. I think Ramco Cements and ACC would be the preferred bets in the cement sector.
What do you like from the pharma space, Ajay? Because the street is divided on how to approach pharma.
Yeah, I think Nikunj, Dr. Reddy's lab is what our analyst is extremely positive on. He's looking at a target price of 3,050 rupees in the short to medium term in Dr. Reddy's, expecting an earnings growth of around 13% in FY16. And the company has a strong ROE of around 27%, trading at around sort of 17 times FY16. So Dr. Reddy's in the large cap space. In the mid cap, as I mentioned previously, Dr. Aurobindo, we've been recommending it for 6 months. Company has done extremely well. I think there are more legs to go for in the rally, which we feel, and could offer a good upside in the medium term. So Aurobindo and Dr. Reddy's in pharma will be advocating. Lupin is another stock we could look at.
Okay, Ajay. Appreciate your time. I know we've extended appointment with you, so have a good day and thank you for joining us.
Thanks.
Ajanta Pharma, let's look at that stock. They came out with absolutely blowout set of numbers. The stock